Okay, so what do we make of a Tesla? Well, in this video, I'm going to start by showing you an interview that I just did with Yahoo Finance to give you my reaction after being able to digest what happened with Tesla over the last 24 hours. I want to give a heads up. I think Elon did a fantastic job. He gave a lot of hope when sentiment was at bottom, and that's very exciting and it's optimistic. The future is so great for Tesla. I love Tesla, and I believe in EVs and energy and solar. I believe in all of that. I'm not sure, and I'm conflicted though, on the path and the actual clarity that we got for the next year, 2, 3, 4, 5 years. I still think the next 5 years have tremendous uncertainty, and you're going to see why in this interview. And then we'll come back at the end of the interview and I'll give you some additional thoughts. Quick note, check out this video clip from our House Hack Roadshow in San Jose. It's amazing. We had such a great turnout in the venture capital of the world. It's so freaking cool. And if you want to come to the roadshows, remember househack.com/2024. Investment deadline is May 1st. Details and subscription agreement are over there. Read the paperwork.
House Hack 2024!
Well, Tesla out with first quarter results, clocking its first revenue drop in 4 years. The EV maker reported both a revenue and earnings miss, but the stock is soaring today after the company said it would accelerate the launch of more affordable vehicles. Despite today's pop, the stock right now down over 30% this year. And it's becoming popular in the options market. Tesla's short interest is up 30% from the beginning of the year. Here with more, we've got Kevin Paffath, who is known as well as the popular YouTuber Meet Kevin, and a long-standing Tesla retail shareholder as well. If my memory serves me correctly, as of this morning, you've also trimmed your position recently. Take us into that decision-making, Kevin.
Yeah, absolutely. Thank you so much for having me, by the way. So what I did before earnings and before we got our Q1 deliveries numbers is I thought this would be a perfect time to tax loss harvest some of those higher acquisitions of Tesla shares. So I sold down in March up to the earnings, which we just had yesterday. And so now the debate is it time to rebuy Tesla? And I think investors should be looking at 3 good things that we heard from Tesla and 5 bad. And I'll keep it short. I'll go through them quickly. Margins up in the face of price cuts. Amazing. Even with credits removed, this was a really good positive shocker. They've clearly got efficiency in manufacturing, and that's the reason you want to invest in Tesla. Big fan of that. So we like that good. We got a very hope-filled Elon, which was also very good, and we have the hope of new vehicle models coming. Whether we actually get new models or they're just refreshes, we'll see. But there was some bad, and so we kind of have to weigh the good and the bad here. One, we just added basically 9 lifts to our valuation. The ride-hailing company Lyft, we added 9 of them to our valuation overnight. So I think we might be adding a little too much hope there. We've got the risk of the share comp plan for Elon Musk. Is he going to get paid? If he doesn't get paid, is he going to end up taking the Optimus robot, the humanoid robot somewhere else? We've got the negative cash flow risk with the AI investments. That's why we're no longer building new gigafactories. Giga Mexico is basically on hold. And we basically just took away the hope that the 4680 battery cells are truly the next greatest innovation, which is the same thing Elon did with Dojo. That, hey, we're doing our own servers, but now we're going to use NVIDIA chips. Hey, we're doing our own batteries. We're just going to use cheaper Chinese chips. So there are pros and cons here. Right. And I'm sitting here wondering, is it time to rebuy? And I just haven't figured it out yet.
Is a more affordable, soon to be announced or unveiled or uncloaked vehicle that they talked about on the earnings call, is that a pro or a con in your perspective?
It's a pro if we can actually get a new model, but they purposefully dodged that answer in the earnings call, leaving the door open to the possibility that more efficient vehicles are just versions of the Model 3 and Y that are manufactured in a different way. So, for example, a steer-by-wire on a Model 3 or Y, or using a 48-volt architecture to sort of bring down some of those costs without actually introducing a new model. And so investors sort of have to evaluate, okay, are we going to get new models that are going to get us to vehicle growth, or do we just forget vehicle growth for a moment and just hope that full self-driving is actually going to produce the revenue we think it might? Keep in mind, right now we've got a take rate of about 10%. It'd be nice to see that around 20, 30%. But will the cost of FSD come down to offset some of those gains? Those are some of the other things to value. Now, I just want to be clear. I love full self-driving, and I think in the future, everybody's going to use full self-driving. But we might be a few years away from robotaxi. So pricing that in, also hard. And that's why when I look, I go, oh, wow, up 12%. It's still lower than where I sold my shares. I sold some shares between about 171, 175. So I could still buy in at a discount. But I'm sitting here wondering, are we really that close to full self-driving yet to start pricing this in? In other words, full autonomy? I'm not convinced of that yet.
What's the dial mover that would tell you it's time to get back into the name?
I think we've got all of 2024 to set an EPS floor. And so there's plenty of time to buy, in my opinion. And then the dial mover is vehicle growth again, where we actually get back to going from 1.8 million vehicles to 2.5 to 3 to 3.5 to 4, 5 million vehicles. That's the growth we need, because the more vehicles we get on the road, the more Tesla can make from full self-driving, the more data we have to increase that moat for robo-taxis, the more potential robo-taxis we can have on the road, the more cash flow, positive cash flow they have with good margins to invest in other initiatives like the Optimus. My concern is with this negative cash flow we're facing now, we're really cutting out other initiatives. And I suspect that a lot of them are going to take the back burner. They're suggesting that they're starting production of the factory to build the semi-truck. But they've said that for 5 years. And they showed us a picture of a graded lot. But as someone from a real estate world, I know that we grade lots just to keep the weeds in the city away. So I have a lot of skepticisms and I have a lot of hope. I'm just not sure how much I could value that hope at right now.
Hey, Kevin, just lastly, while we have you, and I would have loved to ask a question about the Cybertruck. I actually need to pivot here because of some breaking news that came out during this hour from the Biden administration that may influence you or many of your colleagues as well in the kind of influencer and content creator category also, where there's going to be more of the perhaps onus on a potential buyer to come forward and buy TikTok, or else it will not be allowed to exist here in the U.S. and a U.S. owner specifically, I should mention as well. What do you think that does for a lot of the content creators like yourselves, and where do you shift to if not on TikTok?
I would be surprised if somebody didn't come around to buy it, because quite frankly, if TikTok was going to get 100% shut down, you could take the value of TikTok in America and just set it to 0. So anything above 0 is going to be a win for ByteDance. And quite frankly, I'm sure they have plenty of friends with American passports who could buy this company and pretend to be different. Do I really think it'll become truly, fully independent? Probably not. Will it get bought up? Very likely. As a creator, it's definitely an uncertain time, because there's always that chance that it's completely gone and removed from the App Store. And even just a period of time, this is the biggest risk. Even if it just disappears for a few months, as soon as people get the routine of using that kind of platform out of their habit of opening their phone every time they go to the bathroom or they're in the kitchen to get a coffee or whatever, as soon as that routine turns into, okay, now they're on YouTube Shorts or they're on Instagram or something else, that definitely hurts creators on TikTok. So the worst case scenario, I don't think, is that they're gone forever. It's just that if they're gone for a window, that unwinds people's habits, and that's the worst thing that could happen.
Kevin, really insightful. Thanks so much for the time. Really appreciate it. Kevin Pathrath, who you can catch on YouTube. Meet Kevin, of course, and financial analyst. Appreciate it.
Thanks for having me. So what did I think? Well, it was annoying that I've had no cough all day long and I've been live for like 2 hours. And then, of course, right when I get on Yahoo Finance, I all of a sudden have some weird cough. It's like, it's the recorder's dilemma, the live dilemma, but that's okay. So what do I think? Well, I don't know. I think that the broader economy, while we're holding up with earnings so far, and I'm very optimistic about how we're holding up with earnings, I still face a problem. And that is this problem. It is a topping problem of the volatile Nike swoosh, and I think there's still potential for good volatility ahead of us, thanks to the pain of Jerome Powell. Now, I thought Elon Musk would have discussed Jerome Powell yesterday, and we didn't get any J-Pow talk. if we have a second wave of inflation, all bets are off for everything. It doesn't matter how many lifts we add. And I'm not trying to be offensive to Tesla to say, oh, it's only because of, the ride-hailing service that Tesla's up. That's not the argument. It's just to say that we added about $60 billion to Tesla's valuation yesterday. Lyft, which is a ride-hailing service, only has a $6.5 billion market cap. Uber's obviously way larger. But the point is, you add another Lyft, yay, cool, there's a ride-hailing server. If it's not fully autonomous, is it worth more than a Lyft? Is it worth 9 lifts? Is it worth 2 lifts, 3 lifts? Or is it worth, 20% of a lift? I don't know. I certainly don't think that just because we created some mock-ups, we're automatically worth what at least a lift is worth. Or, a third or a fourth, it's actually, what is it? 60 divided by about 150. That would be about 40%. 40% of Uber. Right? Is it worth having added that? And I don't think fully the stock price move here is solely because of this. I think it's, quite frankly, a return of sentiment. You had Elon, the great cheerleader for Tesla, finally tell us, look, we're going to keep doing what we do well. We're going to focus on engineering efficiency, manufacturing efficiency, and using that to introduce new models, whether those are refreshes or completely new models, we don't know, but new products that we hope can bring us to 3 million vehicles of sales. 3 million vehicles of sales would be great, but we also don't know over what time frame. That's another issue. They didn't tell us when 3 million units. If I go 3 million 2026, that's great. That props my numbers a lot. But some of the things to consider compared to the spreadsheet, and I was thinking about this a little bit yesterday, we might not actually get to that 3 million figure by 2026. This is why we created various different scenarios here. And quite frankly, they're incorporating their FSD revenue recognition into their margin. So you're increasing margin by 1% or 2% because of FSD revenue recognition. So if I kill FSD revenue recognition and I say that's what's going to let me maintain, like having FSD revenue recognition will let me maintain an 18% margin, and I now go throw in CapEx, which I'm going to have to go in here and throw in CapEx of about $1 billion. So let me go kill these as a percentage of FSD and just throw in $1 billion annually. Keep in mind, we'll have 85,000 H100s, but those are going to be old, right? I mean, you're going to have new chips that you're going to have to continually invest in to keep getting to the latest and greatest levels of autonomy and better perfection and smoother rides and better comfort for users. It's just going to continuously get better and better and better. And I'm very optimistic about it. But I'm going to throw in a Billy's over here. And so if I do that, if I give them a 30% EPS growth rate, yes, I can justify getting to 201, maybe even 275, depending on how many deliveries we get at a 30% peg, which the sucker's selling for, 161 right now. So that gives me, an 8 to 20% compounded rate of return, which is great. But if I get my EPS growth that only ends up sitting at around 20%, well, in 2 of these cases, my share price is actually lower. So I don't know that we really got the clear color to say, oh yeah, we're going to go back to EPS growth. We did get Elon suggesting that we should be able to beat 1.8 million vehicle deliveries this year, which we had in 2023. But I think you're comparing to a hard year. And I think you've realistically got probably all year to sort of take your time and evaluate, see what's going on. Of course, if the economy just keeps booming, great. But remember, we're up against, at least market relative near all-time highs. So I'm conflicted. That's the way I look at it. Again, I could just declare victory, buy in right now. I could go, look, everybody, I saved $10 a share, and I tax loss harvest. Win, win, win. You could just declare victory. But that would be dishonest to the confliction that I still have. So I'm evaluating how my thesis really nets out, and that's sort of the process that I'm in right now. But these are just some of my honest, transparent thoughts about how I feel the morning after, so to speak. Anyway, hopefully this is useful to you. Let me know what you think in the comments down below. And as we sort of expected, we've got lots of haters on the internet that are retweeting my "Dear Elon Musk, please just cancel the earnings call" tweet. I don't understand this. I think people like to just get out of the way. Although we did suspect that people would do this, but they kind of fell into our trap, so to speak, of just appearing like a hater. But if you remember yesterday, the stock was up like 8 or 9% before the earnings call, and we were joking live. We joked about this, all recorded live. We were like, "Hey, cancel the earnings call. We'll take the 9%," because historically, the stock goes down during the earnings calls. Right? This was great. Elon performed really well on the earnings call. So, of course, it's easy then after the earnings call, when it moves up another 3 or 4%, for, Omar, come on, Omar, you know better than this. But again, this gets likes, this gets engagement. And people are like, "Oh, yeah, I don't like Kevin either." And it's like, well, when you miscontextualize someone, it's just rude and sad, honestly. It's sad. It lacks logic. Sorry, dude, but come on, SMR, reposting without comment, winky face, again, and so you have the luxury of posting that, 3.5 hours after the earnings call ends. Thank you. Thanks for that. That's all I'll say. All right, we'll see you.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.